Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, December the 11th. The year's 2024. Let's talk trading, not your trade. These videos are for educational purposes only. Your results may differ from mine. Not your trade. What am I talking about? When you sit in front of your trading platform, whether it's your phone or your computer or your iPad or whatever, you sit there and you're staring at the charts and you're watching price move and you're thinking, oh man, I could have had, X number of pips if I had only done this. Well, the thing is, doing this is not your trade. And it's really tough, especially for me, because in my head, I don't know how many different trading methods I have. I've got wick zones, fade and the pivot, holos, 1, 2, 3s, turn trades, flip-flop boxes. In fact, coming up, one of my trading buddies, Stan, we've now got the Stan box. We used to have the Walmart lines. I mean, it's just the psychologicals. There's just so many buy zone, rat zone, indicator 2 riding. There's just so many trade types I have in my head. But the thing is, if I do them all, I'm just going to create one heck of a mess. And what happens is when you start out, you're a blank slate. You don't know anything. And then you learn one thing, but it just doesn't quite work because you're not an experienced trader and you're looking outside of yourself for solutions. So you tried this indicator or that method. Oh no, that didn't buy me a Ferrari, so I got to find something else. And then that one didn't buy you a Lamborghini, so you got to find something else. And that one didn't buy you a Rolls Royce, you find something else. And that one didn't buy you a Bentley, and so you find something, and you just keep going from Bollinger Bands to RSIs, the MACDs, the stochastics, the CCIs, to TMIs, the momentum, the volume. I'm laughing because I'm laughing at myself because I'm basically, exposing or telling you my history of all these different methods, divergence, convergence, market structure, Quasimodos, imbalances. I mean, there's just so much that you can put on the chart, and you can basically talk yourself into anything. And it really works, on your psyche, and part of the problem is that, as a new trader, you haven't really focused on risk management. You're focused on making money and getting that Lambo. But what happens is when you lose more than you're willing to lose on a single trade, it kills you. It crushes you. It might even blow up your entire account, and you start over, and then you do it again and again and again. And then maybe you give up, or maybe, just maybe, you go, there's something missing here. Let me slow down. Let me figure out how to put this all together. And, we've talked about brain management before, but I'm bringing it up again because, like I said, it's not your trade. And so, fear of missing out, that FOMO. And then you have the regret of missing out, the ROMO. And it just plays on your mind. I mean, it just really can play on your mind. And so what you have to do is you have to kind of, wipe the slate clean and go, okay, what am I trading? Am I trading this method or am I trading that method? And you pick one method. And it's just like, what are you trading? Are you going to trade the pound? Are you going to trade the yen? Pick one and stick with it, because that's how you get good. I mean, I used to trade the yen all the time. In fact, I started trading it again this past week or so. And then when Walmart and I started trading together, I just switched over to the pound because to me, the instrument really doesn't matter. And at the time there was enough range in the pound to make money, and actually there still is. It's funny, I think it was yesterday, at one time the pound had a range of something like 36 pips or something, and Walmart already banked about 40. It's like, how do you get 40 pips out of 36? Well, that's when it goes up and goes back down and goes back up and goes back down. You can make money that way. But once again, you really have to focus on what your trade is, because it just works on your brain psychology. I mean, because when you start thinking, oh, I could have, and then you start believing it, then that's going to affect your feelings, which is going to affect your attitude, which is going to affect your behavior and actions, and you're going to start jumping into trades when you shouldn't. It's like today. Oh, I wanted to short the pound so bad after the news when it ran up to 75. Let me pull it up on a chart here. I so bad wanted to short the pound at 75, but I didn't. And you know why? Because it was a green M30. And I said, no, I'm not going to short that, because I know, looking at the chart, I don't know what price is going to do. I could have shorted to 75, and this thing could have taken off to the double L. So what I did was I waited for my signal, and I actually got short somewhere around when this candle turned bearish, and I picked up about 3 pips on the trade, because actually I think I was using a stand box. I was short at 75. It kind of reversed on me, so I doubled in, and then when it came back down, I got out with, I think, a total of 3 pips, and I could have waited. I could have gotten more, but you see, once again, that wasn't my trade either, because if I get in a trade and it goes against me, and it goes against me, say, 5 pips or so, then if I enter a second time, my plan, my strategy is to get out with maybe a pip profit, or at least break even. I've entered a trade, the market's going against me, so I'm basically fighting for my life now. And so what I do is I go, okay. And so once I see that, 1 pip profit, I get out. And if it continues, that's okay. But, there's a couple of things that are going on there. One, I'm managing the money, and I'm protecting the money from a risk standpoint, because I don't want to lose more than I'm willing to lose. And I'm getting out, so I'm managing my emotions, because if this thing comes down and I could have had 2 pips and then it runs against me and keeps running, then it's just going to, almost put me into a tilt mode. I don't want to tilt. So it behooves me to take my 1 or 2 pips, get out, maybe walk away, come back, because there's going to be another trade. It happens every day. It almost happens every hour. It almost happens every 5 minutes, where I can do those trades. You can, look at an M5 here, and you can see the price action. But, you can see price was making lower lows, then we had an inside bar, then we had an outside bar. And it's like, when an outside bar gets broken, it's usually going to, give you a nice profit. Here we had another outside bar, boom, to the south side. And you see price ran up here, and price had run up here and then continued. Well, the thing is, what's this? This is a return bar or a big range bar, and more times than not, we see it on the chart. Price will go up and come where? Right back to the open of that. So, but does it always happen? No, of course not. That's why these videos are for educational purposes only, because your results may differ. So the point is that, figure out what your trade is, your trading style. Maybe, like on here, maybe you're a Fibonacci trader. It's like, okay, it puts in a 3-ball, you're going to come back. Maybe you want to shoot for the 50% or the 38 or the 23. You know what? It's 23s. Usually it's a short thing. So maybe you short here at the 10 percentile. You take it down to the 23. You bag yourself about, 8 pips, and you're happy. And you can see here, you did it almost once, right there. Did it again. And you can see here, these big upper wicks versus these small lower wicks. Market's telling you, sellers want to push the price down. Now all of a sudden you got a big wick here. What's that telling you? Maybe buyers want to push the price up. You just have to wait and see and take your chances. And one thing to note is, you put your trade on, the reason you enter, you got to push that off to the side. Doesn't matter anymore because you're now in your risk management mode. You just don't want to lose. The Warren Buffett, rule number 1, don't lose money. Rule number 2, refer to rule number 1. And so that's what you have to focus on. And once again, some of these trades are just not your trade. I mean, one of the other ones we have the highest low and the lowest high right there. That line, shorting that line would have paid off. Nice. Over and over and over again. If, a lot of times I just, give me 2 pips. But, 1, 2, 3, 4 times. 2 pips, that's 8 pips. In a matter of a half an hour or less. Not too shabby, right? So, but you have to pick that one method, and you have to stick with it. Maybe you want to follow the indicator too. Maybe you want to take flip-flop box trades. Maybe you just want to trade at psychological levels. Or here we had a lower wick zone trade. We had a turn trade right here. No continue, right here. There's a flip-flop, but it's at the bottom, so I call that a price turn. Price turned up. And almost any time you see it come out of these, but sometimes it'll turn and this one will come down and keep going down, just like right here. But this wasn't in a low wick zone area. So sometimes that works, sometimes it doesn't. It's trading. You can see here, this low wick zone's way down there. And here we had one from a while ago. But once again, you have to pick your trade. I mean, here's the daily high. We were in the wick zone. Price doesn't like to stay in the wick zone. You take the long, and it comes back in. Hey, guess what? There was a H1 what? Higher open right here. Today, there's the highest H1 open. Holo. Nice move to the downside. You see all these methods, and this is what happens to me, and this is why I'm bringing it up. I have to decide, what am I trading? Am I going to just trade whatever? Because I can always find something to trade on the chart. I mean, there's always a reason to enter long, and there's always a reason to enter short. But the thing is, sometimes it's better to wait, and that comes from learning and experience. So, fellow traders, it's not your trade sometimes, you have to remember, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.